All right. Yeah. All right. Hi, everyone. We'll just give it a few minutes while we wait for people to join. We're still a little bit early. Okay, just while we give it another couple of minutes, you'll see, for those of you familiar with Zoom, that there's a Q&A box down the bottom. You can add your questions down there at any time. And then once we're through the presentation, I'll have a look through those, see if we have any common themes that people are asking, and we can go from there. We'll just give it one more minute as the participants are still ramping up. Okay, let's get started. So, welcome everyone, and thank you for joining. As you're aware, my name is John Casey. I'm the General Manager at Virtue Zone Accounting and Tax. I can see people are already firing through questions. That's great that you've worked out how to use the Q&A. So look, first of all, thank you to all of those who sent through questions or requests before we actually, before today. We've incorporated that into the webinar today. I think it's going to take the shape more of a bit of a workshop. The theme we really saw come through the questions in advance, or the feedback in advance, is there is a real lack of information out there for small and medium enterprises. The information that is going out is around what the actual, what the legislation says, not so much about what companies or small businesses actually need to do. So I think today we will really focus on what do you actually need to do to take it, to benefit from these things such as the small business relief rule, or the qualifying free zone, or also known as the free zone exemption. So what are the steps, the administrative steps that you actually have to take to go through to avail these benefits? So just very quickly, so I don't want to spend too much time talking about the actual legislation. We'll touch on a few parts which I think are very relevant, which we'll discuss how it impacts especially SMEs and micro businesses, and where we'll go from there. We'll talk through some actual scenarios. So we'll make up some businesses, hopefully that might have common attributes with your own businesses, and we'll talk through how they would need, or what the steps that they would need to do to comply. So before we do that, I just want to reiterate, something that I get a lot of from clients, which is the sense of a bit of panic around what's coming, around the corner with tax. So the first thing that we always look at is, what is the actual intention of this corporate tax regime? And if you look at the legislation, if you look at these relief rules, or these benefits, it's really not aimed at disrupting the small and medium sector of the economy, right? So the UAE is bringing this in, and they've very publicly said this, that it is part of the base erosion profit shifting rules. So they want to be a good player in the world economy, and so this tax regime is very, very much aimed at the larger end in town, the larger multinationals, and so whilst and the upshot of that is a lot of the information that is being put out there by the big firms is aimed at the big companies. So again, hopefully today we have a bit more of a focus on small and medium enterprises, and hopefully that is provide some help for you. Okay, so I'm just going to share my screen. Oh, and sorry for those of you that that weren't there right at the start. You'll see down the bottom of your screen on Zoom there's a Q&A box. Please feel free to send through your questions. Sort of pause at the end of the presentation, and I'll go through and look for some common themes and answer some of those. Okay, I'm just going to switch over to the presentation now. Let's go. Lovely photo of me to start. Okay, actually, before I even get into the legislation, one of the questions that I was getting, that I have seen a lot, is actually just around the timing. So we all know that corporate tax comes into place on the 1st of June, so in about a week. But it's actually different for each company, right? And what it depends on is when your financial year is. Now, what I've found is that actually a lot of companies don't know their financial year, and that's not surprising because a lot of companies have never actually had a reason to know their financial year. They've never had to prepare financial accounts. If they're not registered for VAT, for example, they've never had to do proper bookkeeping, and so even the concept of a financial year is something new. So so there are a couple of ways that you can work out your financial year. Quite often it is dictated by the free zone that you're registered in. So you can refer to your incorporation documents, so your articles of association, and sometimes that will actually state when your financial year is, or sometimes it will say something along the lines of your first financial year runs from your formation date to the end of December, and then every year after that you go from January to December, so you're aligned to calendar year. Now, for those of you that are aligned to calendar year, your first taxable year is actually starts on the 1st of January 2024. All right, so tax applies on your first financial year, which starts after the 1st of June. So if you have a financial year which runs August to July each year, then your first taxable year will be 1st of August this year because it starts after the 1st of June. But for majority of free zone companies, your first taxable year will be starting on the 1st of January 2024. So there are absolutely steps that you'll need to take, or that you should be taking ahead of that date to make sure that everything is aligned. But in terms of when is your revenue actually taxable, it's from the 1st of January 2024. Okay. So there are three pieces of legislation that I just want to touch on because I think they're the three most important pieces for small and medium enterprises. The first one, so I'm going not in order here, but the first one and the biggest one, which I think everyone is waiting on, is the definition of a qualifying free zone business or a qualifying free zone person. Now, there's a lot of speculation out there at the moment around what this definition will come out from the ministry as being. There are a few options. I really don't want to speculate and advise around what we think it might be. The ministry actually released something over the weekend saying they really want people to stop I guess speculation around and spreading incorrect advice and rumors. So when we're looking at the qualifying free zone person rules, we're waiting for these to come out. We do know some pieces of what these companies will require, but for the examples that we're going to look through today, we'll take it as a qualifying free zone person being someone who is obviously registered in a free zone. They meet the economic substance regulations, and let's say that 100% of their revenue is coming from outside the UAE. Again, we don't know if those will be the actual rules, but we're going to use that assumption on some of the scenarios that we go through here, so that we can actually look at what the requirements will be to qualify as a free zone person from an administrative steps perspective. The other very important one is the small business relief rule. So this was announced a few weeks ago by the ministry, which states that a company with less than or up to 3 million dirhams of turnover revenue will be eligible for the small business relief, and they won't need to pay corporate tax. They have said that that's not available to a qualifying free zone person, which does sort of factor in, which we'll go through in some scenarios towards the end of the presentation. And then the third one is the tax-free threshold. Now, if you think of this in order, to actually be a taxable person, this would imply that, if you, to be looking at what the tax-free threshold is, or to be potentially paying tax, you would not be a qualifying free zone person. You would not be meeting the small business relief, and you would have taxable profit of more than 375,000 dirham. So there are sort of a few layers that we walk through before we actually start looking at what the tax-free threshold is, what taxable profit looks like, what expenditures are deductible. And so we'll cover that towards the end, because the sort of overwhelming feedback that I've had so far, and most of the client conversations that I've had, people do seem to be falling into one of the former, one of the first two buckets. So the small business relief, or potentially the qualifying free zone person. Okay, so qualifying free zone person. So as I was saying, the full definition is still, we're still waiting on that from the ministry. We expect that'll probably come out in the next week. In terms of the compliance requirements, the ministry has said that free zone companies, if they are to qualify for this exemption, will require an audit. So it does have some additional compliance burden. They do need to satisfy the ESR requirements, so they need to demonstrate economic substance. And one benefit versus the small business relief, for example, is that the free zone exemption basically exists in the life of the free zone. So beyond 2026, which is when the small business relief ends. If you sort of get to a point where you're looking down the line, look down the future of your business, and you may be saying, well, am I a qualifying free zone person, or am I someone who is taxable and I'm looking at the small business relief. The small business relief is actually only available for a couple of years, so this might factor into what where your taxable position is. So the small business relief, as mentioned, so the threshold is 3 million dirhams of turnover, not profit. That's turnover. It's only available up until the end of 2026. So a financial year which ends on or before 31st of December 2026. So far, the ministry hasn't indicated that an audit will be required. They have said, though, that tax losses can't be carried forward, which again may factor into your decision whether to go for this small business relief or not. And the taxable business, this is the one that I think people are most familiar with. Obviously, the very first announcement came out saying that there would be a 0% tax rate on profits, not to be confused with turnover, profits up to 375,000 dirham. right? So the first 375,000 dirham is taxed at 0%, and then every dirham after that is taxed at 9%. Now, obviously, if you would only be taxable under this if you weren't a qualifying free zone person, or if you didn't qualify for the small business relief, or elected not to qualify for either. Okay. So we'll keep revisiting these compliance steps as we go through, because these three are pretty much unavoidable. There are only a select group of businesses that don't have to do at least the 3 steps. So government entities, qualifying public benefit entities, which I doubt there are many people on this webinar who are from government entities, but if you are, welcome. But the majority of businesses will be required to do these 3 steps. So the legislation has clearly said that that a taxable person must register, a taxable person must keep adequate accounting records, and they will need to file a tax return at the end of the period. That will be the same even if you are applying for an exemption, or if you're applying for for the small business relief. You'll still need to actually demonstrate your taxable position, or your position of less than 3 million dirhams revenue, for example, by keeping a proper set of accounts and filing that return. Interestingly, just today, the ministry has announced the accounting standards which are to be used. So they've come out and said it's International Financial Reporting Standards, so IFRS. But for small and medium enterprises, you can use a slightly different version, which is called IFRS for SMEs. It just makes it's a little bit easier to comply with, but you still, it still needs to be proper, thorough bookkeeping, which needs to be done and recorded and records held. There's one small difference to that, which is companies with less than 3 million dirhams of revenue can actually do accounting on a cash basis. They have the option of either doing that or complying with IFRS for SMEs. I think personal preference is to comply with IFRS, because I think it's good housekeeping and healthy to keep the correct records. So we'll jump back to the slide every now and then after we sort of have discussed some of the scenarios. Okay, so I might quickly jump to some questions. So I've got some scenario companies that we can sort of work through. I'll jump through some questions before we get to these. So can we get a PDF file of the webinar later? Yep, we can send something out. Is the corporate tax applicable to free zone companies who are doing business outside the UAE? Yes. So this is the part where we're waiting on the definition of a qualifying free zone entity. So we do know that a free zone company will still need to register, will still need to keep proper accounting records, and you'll still need to file a tax return. If you will be going for the free zone exemption, or the qualifying free zone exemption, you'll need to do an audit as well. What we don't know yet are the actual rules whereby you would qualify. So, again, this is pure speculation, but it may be that, if all of your revenue comes from outside the UAE, that means if you go through those administrative steps, you qualify. What we're not sure of is, if you have one client in the UAE, does that mean you completely lose your exemption, or will it be apportioned out? So this is the definition that we're still waiting for from the ministry, and I think any kind of attempt at predicting what that rule will be is pretty much speculation at this point. And I do sympathise with the ministry somewhat, because the free zone economy, or the free zone setup here in the UAE is so prominent. It's probably one of the it's almost a world first in terms of how the nuance of this tax policy and what they're going to have to do here. So we know that tax is just around the corner. We're expecting it in the next week, And once we have that, then we'll know for sure what that free zone qualifying free zone entity will be. Okay, there's another question here. Free zone business complies with its free zone regulations. That's basically what we're just saying. So we're waiting for that final definition to come out. Okay, we've got a question. Currently, they fall under the threshold. I'm not sure if that's a small business or the profit threshold. So they understand that they need to register, but what do they do further down the line? So to start with, obviously, yes, you do need to register. If you fall under the small business relief rule for now, so under 3 million dirhams of revenue, you can file under the small business relief rule up until 2026. Beyond that, we don't know what the new rules will be around small business relief. They might remove the rule, they might change it, they might keep it the same. But basically, they haven't committed to that 3 million dirham turnover exemption beyond 2026. But if your profits are less than 375,000 dirham, for example, let's say your turnover is 300,000 dirham, your profits are always going to be below that taxable, that tax-free threshold. So you may elect to just file a standard tax return each year going forward. Okay. Sorry. To jump from the bottom up. Have they set a threshold yet for what amount of dividends are tax deductible? So dividends are paid after tax, right? So dividends are paid out of the post-tax profit of your company. So dividends are not deductible. Basically, everything else gets deducted, and then you pay the dividends out from after that. Okay. Definition of a small business. So the ministry has defined this in terms of as it relates to the small business relief rule. Definition of a small business is a business with less than 3 million dirhams annual turnover. Can you use any auditing company? Is there a list of Yep, you'll need to use a certified auditor. Obviously, there are many firms you can go to help facilitate with that. Bridgestone being one of them. So do we need to maintain accounting records for corporate tax? And is the audit from the 1st of June 2023? So we recommend that you would start your accounting now, right? So your first taxable year, let's say your first taxable year is from the 1st of August, right? Starts on the 1st of August this year. Then the audit, the period that would be for your first tax return would be August 2023 to July 2024. That is the period that would be audited and submitted. Let's say you were going for the free zone exemption and you required an audit. But if you don't have your bookkeeping in place now, it's going to be quite hard to actually get things started. Harder to have that start point. So we really recommend that you get onto things now, start your bookkeeping now, and have everything in order. So you do have everything aligned. You won't miss out on, if the rules come out and there are certain parts that you have to comply with for obtaining that qualifying free zone entity benefit. You don't want to be halfway through the year and find that you've already failed it. Okay. So someone said speculations until which point, who to contact for further info, who will be contacted for filing and all the other mentioned requirements. Well, obviously at Virgizone we can assist with all of this. We provide all of these services. The speculations piece, so the only piece that is under speculation right now is the free zone exemption. So the rules around qualifying for a free zone exemption, and those should come out, any day, hopefully soon, and then all the speculation can finally end. Okay. Do the corporate tax rules depend on free zone authorities? Not really. There are certain aspects that will be influenced by the free zone you are in. For example, some have different financial years or a different way of determining your financial year. But other than that, the free zones will be treated very much the same, and the legislation has stated that all free zones will be treated the same. Okay, in the UK, micro entities don't require a third-party auditor. Will UAE adopt similar rules? Yes. So the UAE has only specified two parties or two groups that require an audit. One is the extremely large end of town, so the very, very large companies, and the other ones are companies that want to qualify for the free zone exemption. Now, there is no size limit on that, so it may be that. So what that indicates is if you want to avail the the free zone exemption, then you will need an audit. If you are a small business, a micro entity that is not qualifying for the free zone exemption, so you're taxable, the ministry haven't said that you require an audit. Sorry, I'll just jump. Every company, even with zero or very small turnover, needs to register. Yes, yes, you will. So every company will need to register. Oh, this is a good one. So management fees or intellectual property fees tax deductible. So something that that has to be considered is related party transactions. So transactions with connected persons. The one that we get most commonly is, can I just pay myself a big salary to to reduce my tax? Now, that question is only really relevant for companies that have profit over, or obviously the revenue is more than 3 million, for example, because that's only at that point a company's having to look at ways to within the parameters of the tax legislation to reduce their taxable profit to a reasonable level. So obviously you can't just go and pay yourself a whopping massive salary to wipe out all of your profit, right? It needs to be arm's length. It needs to be at market value. So guidance on that is, what would someone else, an independent person, what would they be earning in a similar role, right? And it needs to be relatively similar to that. If you are, if a connected person such as a shareholder is paying themselves a salary. Okay, I'll probably I might just jump through a few. Oh, here we go. Sorry, am I free from paying withholding tax? So withholding tax, so they've set the scene for that in the tax legislation, but currently there is nothing. So withholding tax is 0%, and there is no obligation to file any kind of withholding tax returns. But the legislation does, say that in theory it's in place, but for now it's 0%. So no withholding tax obligations for now. I'm registered for VAT. Do I need to also register for corporate tax? Yes. So they're separate registration. So even if you're already registered for VAT, you still need to register for corporate tax. Okay. Let's jump through a few scenarios, right? So I'll go back to some questions after we've done this. All right. So let's talk about a scenario where you're a free zone company, and we're going to go through some pretty straightforward ones to start, and then we'll look at some where there are potential options. So first one is a free zone company, 5 million dirhams of revenue per year. All of your revenue is from outside the UAE. You meet the ESR requirements. So this should be And again, speculation until we know the final rules, but there should be someone who qualifies for the free zone exemption. It should be pretty clear cut. And so they have very straightforward compliance steps. They obviously, again, need to register, they need to keep their accounts, they'll need to do an audit, and then they'll need to file a tax return, which basically shows or demonstrates that they qualify for that free zone exemption. This person probably, if they did qualify for the free zone exemption, there probably wouldn't be any benefit in electing to be taxable. I think, for someone like this, especially if they're looking at growing even larger, which obviously there would be, they have a very big interest in maintaining their free zone exemption. All right, small business relief. So again, this is getting very basic, but we're using the very simple example. So let's say you're a mainland company, registered in the Department of Economic Development, your revenue's about 2 million a year, you make around 1 million of profit per year. You would obviously be electing to go for the small business relief here. Otherwise, you'd be paying tax on all of those profits, which are over 375,000 dirham. This relief will be available to you until the end of 2026, at which point, there may be a change in rules. So what would this person need to do? Again, going back to the very basic steps, they would need to register, they would need to do their accounting under IFRS for SMEs. There is no indication that they'd require an audit, so probably don't need to do an audit. And then they would need to file a tax return, even if that tax return is simply saying, look, my revenue is less than 3 million, I qualify for the small business relief, I have no tax to pay. Okay. So let's say you are a mainland company, so you're registered in Department of Economic Development. You only make 500,000, you make 500,000 dirhams of revenue, but you make a loss of 300,000. Now, this is someone who might elect, even though their revenue is less than 3 million, they might not elect to go for the small business relief, because one of the key rules in the small business relief is that you can't carry forward losses. So if this company, it may be that it's their first year and that's why they made a loss. And if they are expecting some high growth and to make a profit in the future, they might not elect to go for the small business relief because they want to carry forward those losses to offset profits that they might make in the future. Okay. So this is where we get into some scenarios where there might be optionality, or people might be considering which way to go, depending on their financial position for the taxable year. So let's say you're a free zone company, you make 500,000, or your revenue is around 500,000 dirhams a year. All of your revenue is from outside the UAE. You meet the ESR requirements, and let's pretend that that would qualify you for the free zone exemption, right? What you would be looking at there, right, is there is an option with the free zone exemption that you can opt out, right? So you can elect to be a taxable person and have the, basically you won't have to jump through the hoops of the free zone exemption to do that, but you can opt out and you can look at, for example, the small business relief. So why might someone do that, right? And one thing to just clarify is that once you opt out of that free zone exemption, the guidance documents have said that will be irrevocable, so you can't opt back in. Now that may be clarified again when the final regulations come out, but as it stands from what we've seen so far from the ministry, that if you opt out of that free zone exemption, you can't opt back in later on. So why would someone opt out of the free zone exemption? If you are a small business, right, and you are only making, your turnover is 500,000 dirhams a year. Let's say your profit is 100,000 dirhams a year, right? You're well below the taxable threshold. You're below the small business relief. You may not want to have to spend the money on an audit each year or go through those additional compliance requirements, to avail the qualifying free zone exemption. I have spoken to a number of clients who see this as a better option. They want to comply. They would just want the minimum amount of compliance. They may only have something like, they may have 50 or 100,000 dirhams turnover per year. They don't want to bother with an audit. They don't want to bother with the compliance steps. And so, they are likely going to elect to be taxable. So they're going to opt out of the qualifying free zone exemption and just operate as a small business, in the tax regime. On the other hand, if this was your first year, you made, your turnover was say 50 or 100,000 dirhams in your first year, but you expect that to grow significantly and you expect there to be large profits in the future, high turnover, more than 3 million, you probably would just, go through with all of these steps in the first year to maintain the qualifying free zone exemption, because you wouldn't want to lose it for the sake of the cost of an audit and then be taxable, going forward. You'd want to maintain your free zone exemption so that when you do grow and go beyond those taxable thresholds, you can still be a qualifying free zone business. So you don't want to give that up. Okay, this is another one, and it's something that clients have asked, right? And it very much depends on what the final regulations are around free zone companies. So what we have a few of is clients who have, say, 90% of their, so free zone companies, high revenue, so 5 million, let's say 5 million dirhams. They have 90 or let's say 98% of their clients outside the UAE, but they just have a couple of clients who are inside the UAE. Now, these are the clients that are really, really waiting for the final regulations around what qualifies for the free zone exemption. And when that comes out, they will be, they may be faced with a choice, right? So if the ministry comes out and says, look, you have to have all of your revenue coming from outside the UAE, otherwise you're not a qualifying free zone person. That would mean that the presence of that 2% of clients inside the UAE would completely disqualify them from a free zone exemption. So these clients are faced with a decision along the lines of, do I actually just have to offboard those clients so that I maintain my free zone exemption and save myself, from being taxable? Or they may say, look, you know what, my business is going to tilt more and more towards the UAE. I'm going to have to, do this anyway. And so, they may lose their free zone exemption, but, the tax that they're going to be paying is going to be offset by the benefit of having these clients inside the UAE, or that revenue source from inside the UAE. Of course, again, this is just based off a potential scenario that the ministry might come out with. Again, the other option is the ministry might say, look, if you've got clients within the UAE, then you may just need to pay tax on them. But again, nothing is certain until we get that final regulation. So the three scenarios that we've just gone through, those last three, we haven't talked about the compliance requirements, but it's all the same. So they'll still need to register. They'll still need to do their accounting. Obviously, I know I'm like a broken record here, but I really want to make sure everyone is aware that, these requirements don't really change. So you're going to have to register, you're going to have to do your accounting. If you're going for the free zone exemption, you're going to have to do an audit, and then everyone's going to have to file a tax return after that first taxable year. Okay, now we get to the last one, which is a taxable business. So let's say registered in the mainland, right? So you're Department of Economic Development company. Your revenue is 5 million dirhams. Your profit's 4 million dirhams, so well over, so you're well over the small business relief threshold. You're not a qualifying free zone company. Your profit is well above the 375,000 dirhams tax-free threshold. It's only at this point that you start looking at your taxable profit, right? And this is when we start looking at things such as, what is a reasonable salary for someone to be paying themselves out of their business? What are the interest caps? Interest is capped at 30% of EBITDA. So, what can you do to bring that taxable profit down obviously within the rules of the legislation? And that's basically, it's at that point that you get to what the rest of the world does. I'm from New Zealand, but the Australians treat this like a national sport, trying to reduce their taxable profit. But I think, going back to the very start of the session, what we were saying about, who is this tax aimed at? It's not aimed at small businesses. It's not aimed to disrupt, startups and micro businesses. So I think, there are these very, very fair relief rules and exemptions that, are there and are available for small businesses before you are even having to look at these questions around reducing your taxable profit. So for one last time, what does a taxable business have to do in terms of their administrative steps? So again, they're going to have to register, they're going to have to do their accounting, they probably won't have to do an audit, but they'll need to file a tax return. Okay, I've seen the questions going up and up and up, so I am going to jump in and have a look at a few more. All right, how onerous is an audit? What does it entail? So an audit is about as onerous as the operations of your business. So if you have a very simple business, normally you can turn around an audit in a matter of days, maybe a couple of weeks. What it normally entails is let's say you're a very straightforward business. You have just a couple of suppliers and a couple of clients. The auditors will ask for copies of your invoices. If you have a receivables balance from a client, they'll check with that client that balance is correct. They'll check some of the invoices to make sure that you haven't just made up the amounts. They check the bank statements. They'll go through the bank statements, ensure that some of that money, the money that has come in from those clients matches the invoices. But really, auditors do this day in, day out, and it's only they'll never check every single invoice. Obviously, that would be far too onerous, but there is a sample size that, prescribed sample size that they have to do. All right, will we get a recording of this webinar? Yes, we'll make a recording available. Okay, I'm registered as a RACAS free zone company. I plan to make profit. So let's say I plan to earn revenue both inside and outside the UAE. My revenue is less than 3 million. I'm confused as to which threshold does my company belong to. So we can't actually tell you for sure until the final regulations are up, I'm sorry. But let's say that if you have revenue inside the UAE, then you don't qualify for the free zone exemption. In this case, you would be going for the small business relief. So you'd be electing not to become a free zone, a qualified free zone company. All right, maximum effective corporate income tax is 9%. Yes, so multinationals are a bit different, but for SMEs, yeah, it's 9% on profit above 375,000. But again, that's only if you don't qualify for the small business relief or the free zone exemption. Okay, ESR, so economic substance requirements. So so that's a bit of a long one. So economic substance is something that the UAE does and a lot of countries around the world do to ensure that people aren't just shifting profits into low tax jurisdictions, right? So the high level explanation is you need to demonstrate that you are actually running a business here in the UAE. You're not just putting intangible assets here in the UAE, and shifting profits here to avoid paying tax on those profits in the UK. The way that it works is the ministry has a list of what's called relevant activities, things like intellectual property businesses, and the ministry, if you are in one of those industries, you need to demonstrate that you do have substance in the state. So that may be through a number of employees or physical offices in the state. So it does, as you can probably tell, it's a bit more complex than that, but at a high level, if you are running a business here in the UAE, then the likelihood is that you comply with the ESR test. You can go to many providers to do an ESR assessment. VirtuZone, we obviously do it ourselves. If you're not sure, then by all means come to us, and we can do the ESR assessment for you. Okay, we've got someone asking about historical revenue. So last year they made less than 3 million. They might make more than 3 million this year, but in their first taxable year they go back under 3 million. So I think they're asking, if I make 3 million this year before I'm taxable, well, if my revenue is more than 3 million this year before I'm taxable, does that disqualify me next year? No, so it only looks at your taxable period. So you need to be under the 3 million in your first taxable year, and each year going after that. What you can't do is you can't be more than 3 million in your first taxable year and then try and get the small business relief in the subsequent one. So you need to maintain from your first taxable year being under that 3 million. Do you need to register for tax if you're a DED mainland business and profit below 3 million? Yes, absolutely. So every business needs to register, right? Every business needs to keep accounting records, and obviously they need to file a tax return as well. So if you think about the logic behind this, so if you're a business whose turnover is less than 3 million, the only way that the tax authorities can verify that is by you providing that information. And to provide that information, it's got to be measured, reliably, which is why you need to keep proper accounting records, right? So you can't just say, trust me, my revenue is less than 3 million. You've got to register, you've got to measure that revenue correctly, and then you need to be able to demonstrate that your revenue is less than 3 million if you're going to go for that small business relief. Is it possible to apply for the small business relief, then move to free zone relief after 2026? So the only thing we've seen around that is in the consultation document, where they've said if you are a free zone business and you opt out, right? So let's say you opted out to be out of the free zone exemption to be a taxable person. They've said that that's irrevocable, so you can't opt back in later on. So the answer to that would be no, but let's wait and see what the final regulations come out. I don't think they're going to change that, but because otherwise people will just be chopping and changing depending on which one suited them best. But let's wait and see. Is a free zone LLE eligible for corporate tax registration? Yep, everyone has to register. So there's a few questions in here around software. So the software you use doesn't actually determine the treatment. It's really about what you put in and what comes out. So so it's not so much the software as opposed to who's actually doing the accounting for you. Okay, I think a lot of them are tax will pay for profit, not revenue. That's correct. So taxes on profit, which is after your expenses. I think most of them are very similar themed. I'll just jump down to the bottom. If a free zone company hasn't started turning a profit yet, which setup does it fall under? They haven't set a limit for, so there's no threshold for applying for the qualifying for the free zone exemption. Again, I hate to not be able to give definite answers because we are still waiting for that last piece. But from what we've seen so far, even if you're a tiny free zone business, you still need to do an audit, which will be a very quick audit. If you've just, for example, you'll still need to just get an audit stamp to submit for that qualifying free zone exemption. Are you required to register by 1st of June 2023? No, so it's not actually open yet. Registration's open on 1st of June. Well, sorry, registrations are actually already open for a number of different companies. They're not open to free zone companies yet, but that should be open in the next week, obviously. Fujairah stay with 0% taxes or change. So this is a federal tax, so it doesn't differ by emirate. So every emirate will be under the same tax regime. I've got a question here. Can you delay your financial year end to maximise the time before filing requirements? So something that you really need to be aware of is what's called the anti-abuse laws. And so the principle of anti-abuse laws is if you are doing something purely to avoid paying tax, then it's very likely to be in breach of one of the anti-abuse laws. So determining financial year, for example, you can't shift your financial year purely for the purposes of delaying your tax bill. There has to be a commercial reason for it, so or a valid reason for it. So we do see people realigning realigning their financial year to, if they're in a multinational group of companies, they might align their financial year to match overseas. So a lot of the a lot of UK companies go 1st of May to 30 April, and so we see some UK companies realign their financial year for that purpose. But you can't really go and just align your delay your financial year purely for the purposes of delaying your tax bill. The other one that I saw some people coming out and saying, when the small business relief rule came out, there was some very I'd say cheeky advice where people were saying, oh, it's great, you should go and split your business into two so that both fall under the small business relief rule. Now that is going to be incredibly obvious to the tax authorities. It would take one look for them to work out what you've done, and you'd be fined straight away. So certainly don't recommend that. Again, everything that you do has to be for the purposes of a valid commercial reason. If you're doing stuff, big structural changes like that purely for the purposes of avoiding tax, and it's going to be pretty obvious. Yeah. And it comes back to, and that doesn't cross over too much to what we were saying earlier about related party transactions. If you're paying yourself a salary, it's very easy to show that is a, that would be a market value transaction. So that's not, that's not an issue in that regard. Okay. I think some of those, so there's a few specific questions coming in about people's individual businesses. I think you've probably got my email address or my team's email address if you want specific advice around it. We're doing free consultations. Obviously we are covering all of these services ourselves, especially all of those mandatory steps. We do all the bookkeeping and everything here ourselves for all of our, we have a number of clients who we do this for. And so, if you do have any further questions, by all means, please get in touch with us. and nothing is too small. Even if you're not sure what your financial year is, we can help you work that out, all the way through to the tax structuring around what you need to do to, if you are taxable and you do have high revenue, high profit, putting measures in place. But most importantly, for I think for the majority of SMEs, we can help make sure that everything is aligned so that you can benefit from whichever relief or exemption might be available to you. Okay, so I think we'll end it there. Thank you again, everyone, for joining. I think that the team will make a recording available and a PDF available for this after this. And yeah, hopefully you get in touch if you have questions, and we can have another conversation soon. Okay. Thank you.